Let's quickly get to Pranav Gundlapalle, Senior Analyst, India Financials at Bernstein. Pranav, apologies for the delay. We just had some breaking news with Gail. But here's the question and why we wanted to talk to you. Second quarter earnings season is over. And in this move to the all-time high, the best performing sector has, of course, been banks and financials. From here on, which are the big bank names that look most promising to you, both in terms of earnings and growth, and perhaps some valuation comfort as well?
Good morning. So I think the overall sector is in a very nice position, right? So you have growth, which is picking up. We saw this quarter that on a sequential basis, the growth rate improve, and then margins are set for an improvement as well. Even if we get a rate cut or two, we should see a steady improvement, or at least no further downside on margins. And we also have asset quality, which does not look like to be a sector-wide issue. So I would say top down, the sector does look interesting. In terms of the names, to us, amongst the private sector banks, HDFC and Axis look extremely interesting. HDFC, given that it will see its profitability trajectory slightly better than peers, thanks to some of its idiosyncratic factors, whereas Axis has the cheap valuation on its side. But the public sector banks also should continue to do well. What we see is that they are able to grow almost on par, if not faster than the private sector peers, while maintaining their 1% ROA, which means across the board, you should see steady compounding for most of the large banks that we see.
That's interesting. Okay, in terms of factors, we'll come to tier 2 banks in just a minute, but just in terms of factors that will be the biggest trigger for stock prices from here, will it be second half growth? Will it be margins not falling, maybe even expanding? What should we watch out in Q3 and Q4?
The growth would be the key. Margins is reasonably priced in that they will start improving from 4Q, if not 3Q itself. And that's not a big surprise. Growth will be key. An improvement to 13-14% growth for the sector would be a big catalyst for the entire sector.
Discussing financials, let's quickly round up that conversation with Pranav. Pranav, let's move on now to tier 2 banks. So much happening, so much deal activity. J&K Bank just told us that they also are, very keen to come to the market for an equity fundraise, maybe by Q4. In the tier 2 space, what will you watch out for and what do you like?
Yeah, I think in the broader tier 2 space, we are seeing activity given that it's clearly a benign environment. So if somebody wants to push for growth, this becomes a very nice setup. But most of them are fairly valued at this point. We don't see something that is strikingly cheap. And a big re-rating for some of these will require a strategic shift. Now, large investments would help, but you would need more than investments to pull off some of those strategic shifts. So we'll wait and see if someone can start delivering meaningfully higher ROAs than where they are today. But otherwise, most of these mid-tier banks are relatively well priced. So nothing that screams out as a buy for us.
Okay, all right. Hi, Pranav. Good to see you. And Pranav, for the sector on the whole, credit growth has been lacking. Are you seeing signs that there is some kind of uptake out there? And for the second half of the year, what are you factoring in terms of credit growth for the industry on the whole? And what would that mean for FY26?
Let's see. FY26, we expect about 13% growth. 2-3 things will help. One is we have seen some uptake from all the consumption boosting measures of the government, be it the GST cuts and rate cuts and tax cuts. So that has started to show up in the latest quarter numbers. So that's number one. Number two, you also have a favorable base effect because last FY25, the real slowdown happened towards the second half. So the base effect starts to look a lot better. And third, we have some of the regulatory relief as well. So, for example, the bank lending to NBFC is slowly starting to come back. And that, again, had come off last year because of that increase in risk weight, which has now been reversed. So put all of these factors in, we do expect about a 13% growth towards the end of FY26.
Okay. All right, Pranav, we'll leave it on that note for this morning. Thank you so much for joining in. Good to have that conversation, that perspective. You have a great Friday, and we look forward to talking again soon.